In today's episode, I'm going to walk you through how to read supply and demand zones on a candlestick chart. These are often referred to as areas of support and resistance. The better you get at visualizing these areas on candlestick charts, the better you'll be able to time your entries and your exits. Because after all, if you're getting in really close to an area of support, what's your max loss? Your max loss is if the price doesn't hold support, if it breaks through that level, which means the closer you're getting in to that support base, your stop is tiny, which means you now have the potential to get a 2-to-1, 3-to-1, 4-to-1, 5-to-1, maybe even 10-to-1 profit versus loss ratio on the trade. And this is when you can do really well, even if you're only right half the time. You could be wrong 50% of the time, but when your average winners are 5 times your average losers, you're gonna do well. What I'm gonna share with you today, you can apply to Forex, cryptocurrency, futures, or you could trade stocks the way I do. So let's go ahead and jump into the charts. Now we're gonna get started on a 1-minute candlestick chart of a stock that went up over 100%. Now I haven't drawn the supply and demand zones on this chart yet, but as soon as I do, the light is gonna go on and you're gonna be like, wow, I can't believe I haven't looked at charts like this before. It's a no-brainer once you start seeing them through this lens. But first, I wanna get you sort of oriented to how I have my charts set up. So I'm an active day trader, and the chart that we're looking at right here is a 1-minute chart, which means each one of these candles represents 1 minute of time. I also have some standard technical indicators on this chart. Technical indicators help put price action in context, because otherwise it's hard, if you say the price is $10, it's like, well, is that good or bad? What's it relative to? And so these technical indicators that I use on my charts are pretty much the same that millions of other traders are using. So I'm just going to break them down for you just to make sure we're on the same page. So number one, I have EMAs. EMA stands for exponential moving average, and I use the 9, the 20, and the 200. These are the moving averages that I'm using on my charts. And so the 9 is a gray line right here. The 20 is a blue line right here. And the 200 period moving average is this magenta line that's further down. A moving average takes the average price over said period, and that helps sort of provide context. So what's the price right now relative to the average price over the last 200 candles? So on a 1-minute chart over the last 200 candles, the price is way down here at 220, right? So the current price is way above it. That helps give context, and that's what we want to see. So I'm using my 9, 20, 200 EMA. The orange line right here is volume weighted average price. The volume weighted average price is it is a moving average, but it includes the amount of volume that is traded at each of the prices. So it actually represents the true equilibrium point of a stock during the course of a day. So it's like slack tide, or kind of like just a loose rubber band. And then when the price gets extended away from VWAP, that gives context. I have volume bars down here. So these are going to be standard on most charts. It just shows the amount of volume that took place in each candle. But it's very helpful visually to see when you've got high volume versus low volume. And then the fourth indicator is the moving average convergence divergence indicator, which is known as MACD. So number 3, volume bars, and number 4, MACD. And those are the standard indicators that I have on my time frame, on pretty much all time frames, but this is just the 1-minute chart for right now. Okay, so let's get kind of dialed in and in the zone on this chart. Okay, so what we've got going on here is a stock that went up over 100% very quickly. How do we understand areas of support and resistance? So what I always do when a stock is first coming to my attention and it's first squeezing up like this, I pull up the chart and I try to get context. I try to understand, okay, the current price is at 220. Is that good for this stock or is it bad for this stock? And so the first thing I'm going to do is I'm actually going to jump out to the daily chart, and this is the daily chart here. And this all of a sudden presents a ton of context, because now we see, oh, wow, okay, there's no doubt that this is a stock that's been beaten up for a long time. It's sold off a lot. Where are we going to have an area of potential resistance? And I would say very logically around $3.50. And what we're seeing here is that this is the position of the 200 moving average, right around 350. The 200 moving average is one of the most respected technical indicators on the daily chart. And so what's important to understand about technical indicators is that they are a universal language, and it is respected by all the traders who read that language and study that language. So just like a red light at a traffic intersection means stop, the 200 moving average means stop. It's the same thing. It's just the language of the financial markets, which is a language that you're beginning to learn. What I would say is, if you're new, the more you immerse yourself in this environment of learning about the market, the faster it'll start to pick up for you. Just like learning another language, just surround yourself, watch these videos, get into the communities, read books, and all of this will start to soak in and become second nature. So when I looked at the daily chart, the first level that I identified as being a resistance point was at about $3.50. And then I looked to the left this way, right here, and I just asked myself, are there any areas here where we might see resistance? And I noted this candle here where there was a lot of selling volume. And I looked over a little bit farther, and then I saw the high of this candle up here. And I also, I guess, would say this is a possible area here. So there were a couple of areas that I noted that could represent some resistance. And to kind of help you better understand how this connects to supply and demand, if the price comes up to 350 right here, do you think there's going to be a lot of supply or a lot of demand? The answer is there will not be a lot of demand. Most likely, because we're right at resistance. So in fact, there will be a surplus of supply in the form of sellers. There will be a lot of people selling shares here. That'll create supply, and the price will decline. When there's a lot of demand, the price goes higher. Now, if the price can get above this 200 moving average, and it can hold above it, then we could see demand off that level for a move back up. But first, it has to prove that it can get above it and hold above it. And that may not happen. Now it could happen because this does have news and the catalyst is decent, but it's a little bit of an if. And what's pretty much a sure thing is that we're going to have resistance at this level, at least initially. Okay, so when I'm trading, this is what my main monitor looks like. And we actually have 4 charts here. Let's see, we've got 1, 2, 3, and then number 4. These are all for the same stock, but what's different about them is the time frame. This is a daily chart. This is a 5-minute chart. This is our 1-minute chart, and this is a 10-second chart. So when I'm focusing on a stock, I actually am primarily trading off of the 1-minute, the 5-minute, and the 10-second chart, but the daily chart provides that context. So one of the first things I do is I take a look at the big picture, because if I see, for instance, on the daily chart that we're coming into a supply zone, there's going to be a lot of sellers, I don't even have to look at the 5-minute or the 1-minute. I'm not going to want to buy it. The daily chart has to check out first. And if it does, I zoom into the 5-minute. If the 5-minute looks good, I zoom into the 1-minute. If the 1-minute looks good, then I may pull up the 10-second chart to find my initial entry. Now, for those of you who are curious about how in the world I'm finding stocks that are going up 50, 75, 100% in one day, I'll tell you that I have a system that I follow every single day. These are stocks that have news, but I'm not searching through all the breaking news headlines. That's not the way to do it. There's thousands and thousands of stocks in the market that are putting out news every day. Searching through the news headlines, that wouldn't help you. And even if you were the very first one to get a news headline, you wouldn't know if it's good or bad without understanding the company very well. Companies usually put out headlines that sound good, but they could be terrible. So a clinical trial company, doing pharmaceutical stuff could put out a headline that this drug, success among 60% of patients. But the last headline was that the success was like with 80%. So it's a decline. So unless you can put it in perspective, you can't take the trade. So what I do instead is I'm actually using these stock scanners right here to search the market in real time for stocks that are moving up at any given time. Out of 10,000 plus stocks that you could be trading, there's probably only 1 or 2 that have gone up more than 10% in the last 5 minutes. But when a stock does that, beep, 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 it's going to hit my radar. I'm going to see it moving. And then I'm going to pull up the chart and I'm going to check to see what's the catalyst. Why is it moving? And so that's the process that I followed yesterday, or was it yesterday or the day before when REBN first popped up? It was yesterday. Okay, so this pops up here, and the first thing I do is I check the daily chart to see if there's any areas of supply zone. And I recognize that there would be resistance, supply zone, right around 350. But the current price at 220, I was like, no, that's fine. I mean, that's not a concern right now. I checked the 5-minute chart. There is 0 nearby resistance. So we've got no issue on the 5-minute chart. So now I'm thinking, all right, this is something that I can trade. But it's squeezing up right now. It needs to pull back. I need a momentary pullback to help me establish risk. And that comes in the form of a red candle. Right here, we have a red candle. We have a high of about 240, and we have a low down here of about 207, 208. Now, the low just above the whole dollar of 2 seems to be holding as support. Right here, we have something very important that happens, and this is called a double bottom. A double bottom right here. So see how this is, imagine a man or a woman, if you'd like, or a man, whichever you prefer, sitting. And this is establishing support as they're sitting their little butt right here, the double bottom. So now you've got support right here, and you've got that move that comes back up. So I would say now at this point, we can establish that 209 is an area where demand came in. There was support here. There is demand. So this is a demand zone right in here. Now, we don't know exactly, it hasn't been tested except for these 2 candles here, but we're just going to draw that little demand zone. Now, from there, the price begins to move up. And so I took my first trade right off of this level, and the price goes up to 230, 240, 250, up to 280. But notice up at 280, we start to have a little bit of a double top. All right, so now we've got a little bit of resistance right up here. So we've got a possible issue forming at around 280. And I said, I'm going to watch this closely. It pushes a little higher, and then notice how it rejects. So this is where I started to think that we had resistance up around $3. That is not uncommon at all, because most of these stocks will trade with a decent amount of respect to half dollars and whole dollars, which that's another way of saying that when the stock approaches the psychological resistance of 3, it's going to hit sellers. Why does that happen? Well, there's a lot of people that will just throw sell orders at the half dollar and the whole dollar. And market makers sort of know that, and so they do the same thing. And so we often see that when we're watching price moving up, the way it moves up is we'll have our, I'll just sort of draw this here. These are going to be half dollars and whole dollars right here. So we've got half dollars, whole dollars right here. And so typically we're going to see the price comes up, and then it'll pull back for a second, and then it'll punch through and pull back for a second. The pullback will be red, but you get the idea. It'll pull back again for a second, and it'll pull back again for a second. And then when it finally reverses, it's usually reversing off of either a half dollar or a whole dollar. This is very common. So it's common because of the just psychological effect of, oh, I'm just going to sell at $3. If this thing goes to 3, I'm just going to sell at 3. So a lot of people put their orders at $2.98, $2.99, $3. So we saw this double top here at 81, and then we pushed up to 3, but we ran into this area of resistance that I would say is more or less between about like 285 and about 305. So we're going to draw this sort of right in here. And this whole area, I would say, appears that it's going to be an area of supply where people are selling. All right, so now we're going to watch to see how this theory tests out. But that's my suspicion. Okay, so now we start to pull back a little bit. As you see, we dip back down to about 265. It sort of bear flags a little bit. It goes a little bit lower. Our MACD does a crossover right here. So now we're getting into a little bit more weakness. But notice this bottoming tail. A bottoming tail there represents what? Demand. So now we may have a demand zone around 250, right? Now that would also make sense, and that's in line with the bounce off of a $0.50. So we came up, let's just say in this example, to $3, and then we bounced off of $2.50. So now we know that it seems that we have a supply zone up here around 3 and a demand zone around $2.50. This is very common that it would be correlating with these prices. So now I'm going to draw a little bit of a demand zone starting here, and I'm going to put it about 10 cents on either side of the price. So, and we'll move this forward as we keep going. And this we're going to continue to move forward. Okay, so now watch what happens here. We've got demand down here. We bounced off this level. We came up and we kind of ran into this resistance zone here. This resistance zone or supply zone, you could interchange the two words. It comes back down. Now you come back to this area. Doesn't quite come down to the demand zone, but it comes down to this area and then it sort of pushes back up here. And then let's draw this forward. So watch here. We try to come back up into the same area and we're not able to hold. So once again, we come up to about $3 and there's a supply. There's a lot of sellers up at this level. Selling, selling, selling. And we drop back down. Now in this candle here, this is a topping tail, a shooting star candle. So we squeezed through this level, but we immediately came back down, which further confirms that there were a lot of sellers up at this price. Right? Now, in this area here, it may be fair to say that the supply zone is a little higher. It doesn't necessarily have to be the bottom of the candle. It may be that it's a little higher, but these are kind of more or less zones. It doesn't necessarily go to the penny. So now let's move this forward here. All right, so we're going to move this forward, and we're going to move this forward. So this is the zone that we're kind of playing in right now. So notice, we are in the zone, sellers push it back down. We try to come back up, sellers push it back down. We come back down here, and now there's buyers. We dip down, and the buyers bring it back up. So there's demand in this area. Now, just by simply drawing this initial trend line at the low of this candle, which is the easiest way to do it. You draw the trend line at the low of this candle. You could draw the trend line at the top of this candle. Drawing a trend line at the top of an upper candle wick is helpful. However, also just keep in mind, if you've got a really big candle wick like that, what was the price action just before you broke? Because that's probably going to be a better reflection of the price that's going to be resistance as we move forward. Okay, so the easiest way is to just draw those single lines and know that it's going to be more or less at that area. Now, this price at about 280, which is sort of where we had this double top, you know, it's kind of broken it a couple times, so that may not be as valid of an area. And sometimes if I notice that the price is moving through an area that I thought was resistance quite freely, I'll say, maybe I was wrong on that, and I'll remove that particular trend line. So maybe at this point we say, yeah, that's maybe not an accurate trend line, and this seems to be like a little bit more up in that area. All right, now this trend line that we drew down here at 209 has not been tested. It'll still be on the chart, but it's just right now not valid. It doesn't seem like it's tested. Okay, so now watch this. So now something really important is going to happen. We come back up to this area and we try to test that 310 spot again, that $3 area. So we push up to 3, we hit a high of 310, it dips down, and this is what's so important. Are we able to break through the supply zone? If we can break through the resistance supply zone and hold above it, well, we've just bought through all of the sellers that were holding it up. Now it's game time. Now, the one thing I'll say is that this has the highest volume candle right here of the whole day. 600,000 shares in 1 minute, another 400,000 shares the next minute. So that's 1 million shares of volume right here. And it's kind of struggling. So when you have a lot of buying and we're struggling to break, that is further confirming that there are a lot of sellers right at this level. And that was something that I noticed yesterday and I was a little concerned about. It, however, does push through, as you can see, and now it's holding above this level. And as it dips down off of that level, it gets bought back up. And so this is the process of an area that was formerly resistance, formerly a supply zone, becoming support, and then becoming a demand zone. Now the price is holding this level. This is becoming a demand zone. We're going to squeeze higher here. We're going to punch all the way up to a high of 335. We come back down into the same zone, and now it's a demand zone, right? Notice how we had, back in this area where we had the demand, we had the bottoming tails. Bottoming tails right down here. We dip down, they get bought right back up. We dip down, we get bought right back up. Now we're dipping down, and we're getting bought right back up. If you are having trouble visualizing possible support and resistance zones, look for candle wicks. Big candle wicks like that help identify that these are areas of resistance, supply, or demand support. So we bounce off 290, and then watch this. We push up to 295 to $3. We push all the way up to 390. Now, what do we have a problem with up here? Well, whole dollar, right? 290 to 405, we've got this whole dollar zone. So now we've got a new zone that's starting right up here. And in this case, you see that we really struggle with it. This is right around the $0.5 whole dollar of 4. We've got resistance here, and we are unable to hold and break above it. Our supply zone down here is not being tested currently. In fact, you may be able to argue that we have a new sort of support zone that has formed in this area. Perhaps you've got a double bottom right here. Double bottom, it breaks through. So it seems like there may be a little bit of a zone in this area that could be forming as support right in sort of this area. Right, so a little bit of a demand zone in here. It finally is able to push higher, and it surges up to this level here. And again, it tries to hold it, and then sellers push it back down. And then we come back to this previous zone down here. And look at how we trade in this zone for a long time, right? And then we start to kind of break below it. I mean, this is for hours. It's just in this zone. Now you could see it tries to kind of push outside it, but at this time, it's below volume weighted average price. It's not able to hold. And then going into the sort of end of the day, it just rolls over. And then that's where we come back down to the next zone here, right there. So we come down to there, and then we didn't come much lower than that. So and then you can see again, we're sort of holding right at that area, and we continue to hold in these areas. These are demand zones. We bounce off this area, but again, now at this point, the catalyst is kind of worn out and it's not really holding. But these are valid zones. Look at this. I mean, let's step back. Well, let's be real. These are very valid zones. If you're drawing these on your chart, they're going to help you. So these are areas of resistance where we've got a surplus of supply, areas of support where we've got a lot of demand. Okay, so this is REBN. Now, let's take a look at another one. We've got GSUN here. This one's particularly interesting. We're going to do the 1 minute chart on this one. This was one that put in kind of a fast move, and sometimes that'll happen. We'll have just like a big sort of blast off, and then it sort of fades back down. Okay, so in this case here, we have this initial move higher. All right, so we're gonna get oriented. So we got this initial move higher, the price starts to pull away, and then it comes into a little bit of resistance here. All right, so we'll just draw the trend lines here just to make this one a little simpler. So this is gonna be our resistance zone. So we've got a little bit of supply up here. We punch through it. We have a very nice little 1 minute pullback right here. So love that pullback. That is very clean. It pulls back, pushes higher, it pulls back again, and each time it pulls back, there's demand because the price surges higher. And then we come up to topping tails up in this area, right? So now I've got this zone of topping tails. Where did we have support? We had support down here at this candle, which held for a little bit, but unfortunately on this particular stock, it just was not quite strong enough to keep going, and it was able to push through that level coming down. And then what's the next level you're worried about breaking? Right in this area, right? Then what's the next level? Again, back in this area. So these are the areas that become in play. And this is really helpful when you're looking at a chart, because now you're able to sort of see, okay, as this is coming back down, where's it going to come to? And it's especially helpful when we're in the context of price moving up, because then we know, okay, we can buy off this support as we start to curl. We look for some of our other indicators to align, like a MACD crossover, the volume starting to pick up, the moving averages and the VWAP supporting the move. So it's not just the supply zones, but it's certainly going to help in the trade. Now, let's look at, CPOP. CPOP, this is another one. We'll look at the, can look at the 1 minute chart on this. So this one, the move actually began after hours. This area back here is after hours, and then this is pre-market. So the move begins back here, and initially it pops up, hits a high of about 240, and then it pulls back, pops up again. So now it's like, all right, what's our level? Definitely 240. Right? We've got to draw that out. That's a zone. That's resistance right now. It's a supply zone. We're selling off it. We get above it. Now it's kind of holding. All right. So this is that pivot. But if it comes back down, there it is. Moves up, comes back down again. So we know that 240 level is important. It's holding. And then right here, as we start to kind of pull away during the pre-market session the following morning, I start to look at, all right, well, where did we have some topping tails? Right, so we had this topping tail right here. This is coming up into this area, more or less. We do get above it right here. And so in this area, it's resistance. And then we bust through it. We hold, more or less hold. And now it's becoming support for the next leg higher. But look at how this plays out later in the day. It's still a critical level, right? It breaks below it. And then right here, it's still like right at that level. So you can see how this is a zone where there's a lot of volume. Sometimes when there's a zone like this that's very, very obvious, we'll call it a point of control. The price above point of control is bullish, below it is bearish. There are some indicators that will tell you based on total volume, the actual point of control, which would be the price for the most volume traded. It's not always going to be as obvious as this is sort of in this example. In this case, we do have a fair amount of volume that took place a little bit higher here, but let's see, let me find the indicator and I'll pop it on the chart and we'll just see what it looks like. So we're going to do volume, fixed range, visible range. So this is showing you the volume profile right here, and look at how close that is to the line that I drew, right? So, that's mathematically telling you where the most volume took place, and it was right at this level. This is sort of the point of control. So I'm able to visualize that just by looking at the chart. As a beginner trader, these indicators such as volume profile can help you when you're still kind of struggling to visualize it. But what's important here is that when the price is above, it's bullish. When the price is below, it's bearish. And of course, this line is going to move and be adjusting during the day based on volume and sort of the way the price action is moving. So here you can see kind of like coming back up and sort of testing this level. We'll see, we'll see what happens. I wouldn't be interested in buying it just because it's up at that level now, though, because this is well below the volume weighted average price. And it's just, at this point, it's just not a very bullish chart anymore. It was, and then, it kind of fell apart. So it's just too weak for me. Now, if you want to learn more about my strategy, specifically as it pertains to buying these micro pullbacks following breakouts, I'll put a link pinned to the top of the comments and linked in the description where you can download my micro pullback strategy as a PDF. You can print it out, you can start practicing it in your own trading. And look, if you enjoyed this episode, I hope you hit the thumbs up. I hope you subscribe to the channel, and I'm looking forward to seeing you for the next episode real soon. I'll remind you as always, trading is risky, so manage your risk, take it slow, and we'll see you back here real soon.